Hi everybody, Lance Browning, Income Solutions Wealth Management in Tyler. And look, we all know these are challenging times. And this week may be the toughest as we wait for COVID-19 to reach its peak in the United States. As the war against COVID-19 wages on, we continue to be inspired by the tremendous bravery shown by healthcare workers on the front lines. Other heroes will likely emerge from a lab somewhere with a vaccine in the near future. In the meantime, we have important roles to play by maintaining quarantines and social distancing. We anxiously wait for the day when this threat is past, as life feels, well, very different. Many of the things we enjoy most are not available right now, such as traveling, sporting events, my personal favorite, concerts, or just dinner with family and friends. We're video conferencing with our coworkers while children are going to school online, and we're finding new ways to stay connected and entertain ourselves without leaving our homes. Netflix, anyone? As a society, we're finding forced isolation can be pretty challenging. As we adapt to these changes in our daily lives, the stock markets have had to adapt to the new economic realities as well. The longest economic expansion in our nation's history has ended as the U.S. economy has entered a recession. This economic contraction is quite unique, though, as it's the first one brought on mainly by governments, as they closed quote-unquote non-essential businesses and initiated social distancing restrictions to limit the spread of the virus. It may also prove to be unique by potentially being one of the shortest recessions in history, depending on how quickly the virus could be contained. What is not unique is a challenge for investors in navigating the bear market that's accompanying this recession. Historically, the best time for many investors to buy stocks has been at the trough or low point of a recession, although the trough usually has only been evident in hindsight. That's key. Since 1970, bear market low points have occurred within an average of 3 weeks of the biggest increase in weekly jobless claims, something that we hope came last week. In previous recessions since World War II, stocks bottomed an average of about 5 months before the end of the recession, as stocks sensed improving economic conditions and improved economic data. That's according to the fine folks at FactSet Research. No one knows for sure when stocks will bottom this time, but looking at these data points suggests we may be getting close. We've received some better news in the battle against COVID-19 over the past few days. China, for example, has contained its outbreak and its economy is restarting. In Wuhan, which was the epicenter of the Chinese outbreak, the lockdown is being lifted. In Italy, the epicenter of the European outbreak, a peak in new cases likely was reached last week, and the government is starting to plan for a restart of its economy. The epicenter of the U.S. outbreak, New York, is starting to see a slowdown in new cases. The fight isn't over, and we can't fully discount another wave of new cases, but the other side of this crisis is coming into view. The stock market also has started to sense that we're nearing an inflection point. This is one of the greatest challenges we as Americans have faced, but some light is starting to glimmer in the dark tunnel. We don't really have a playbook for this human crisis, though we are encouraged that the measures being taken are having the desired effects. This playbook for investing in bear markets and recessions is quite a bit clearer. It suggests that we stay the course, consider selectively taking advantage of emerging opportunities where appropriate, and focus on long-term investing objectives. Please stay healthy. Don't hesitate to give us a call if you have any questions. Again, Lance Browning, Income Solutions Wealth Management in Tyler. Stay safe and God bless.